What's going on, guys? Time for YouTube recap about that Friday. Do you guys want to stop getting absolutely destroyed by these algo impulse moves? Well, stick around. I'll tell you how exactly we navigated this one and called the short targets way ahead of time, way down here at 5852, 5856 on the ES futures. So as we dig into it, I'd like to start on the Twitter, right? And we come on down to some of our calls. We have some beautiful short metrics here. These are the calls right here on the short. I put out the short targets for today, and those are the ones I just said. So we did have those. And if you notice, price action was barely far away from those. And it was just ramping back up. As far as the X is concerned, I said short NQ levels today. We got 60, 70 points to the downside. And that was, again, from where we were talking about it. Just because we're posting short levels does not mean that is an entry. So you can see here we were only looking at about 70 some points. And if you know NQ and ES on Friday, boy, did it blow out way past that. So we got some short scalps here, posted some P&Ls. Those came back to pretty low and flat. And then I had to post this post for the over-under scam. We got scammed out in pre-market 6 a.m. And these are these devilish little candles you see right here that I'm about to go over on SPY at 6 a.m. for the second day in a row. Thursday did this too. And then I changed zone to right here for over under. And I said before it happens, quite the scam up here in the pre-market. 6 a.m. swapped onto upgrades, random China fluff news, big old scam. Red zone is the new over under zone. Above this, it will fully manipulation. Get out of the way. It means it's going up. Below, regular trade session for the day. So let's take a peek at what happened to these predictions and how we navigated the market on a crazy day like today. Not today, it's Saturday, it's Friday. So this is what that big force up looks like right here. Let's get to the red zone in which we had. So zoom in here on a little 5-minute. Now this is where we posted this right here. And I have a very specific double Fibonacci algo system here that I'm going to leave for my premium members. We went over this in class on how we got this level. But once we got scammed out at 6 a.m. in pre, she left beautiful short targets on ES down here in pre-market, right? Messing around with my Fibonacci golden pocket around 579.25. It's the GP, the golden pocket, right? So it left some short value down here on algo reversal. So when I seen this force up, I'm like, oh, we're going to have a nice little pullback down into golden pocket, and we might have a long press day. 6 a.m. comes, and again, if you look at 6 a.m. on the prior trade day Thursday, right, Central, we had this beautiful, devastating short, and that's where we're up on the 7 contracts, 3-4 grand green on NQ. Because we hit another beautiful golden pocket tag here in the pre, comes down, ends up shying away from the 100 EMA, shying away from the 666 on that 5-minute SMA, and then just blasts off with unnatural force up move. Now, again, we did have a little bit of algo, a little news stretch there, so on and so forth. So as I posted on X, if we go above this red zone, get out the way. It's over. Get out the way. It's going straight up. What do you see? Red zone. Bam. We opened up overneath, above the red zone, pushed all the way up to 584, almost 80s here. Just absolutely nasty. So I stepped aside in our team here at the Discord, and I said, man, I'm just not too comfortable with the full force up over the red. We got to wait till a longer term short comes in. We did pick a top, and we did call a VWAP rejection before we left here. I usually get down around 10, 10:30 here in the central, but right as we were getting done today, I said, watch this top. This is the one that's going to most likely come on down to the VWAP, which is that purple dash line. So we had a beautiful scalp right there. And then it continued the wash through the afternoon to hit my algo targets. Now, as I told my team, these algo targets we talked about way back in pre-market and called on X, right? These have never missed a day. They don't miss. My algos do not miss. These fill same day every time. So when I'm staring at this type of extension from where the algos were made all the way to the height of the market top, 50 plus points away from ES's target, 300 plus on NQ, because we always trade the futures of NQ and ES off of SPY and QQQ. It is much better to do that off the ETFs. So let's get into it. How in the world would you navigate this, right? And how did we get out clean and green for the day? Well, we've seen the 6 a.m. rollover, okay? 6 a.m. happened, algo came back down. And what we know about shying moving averages, when something looks for a tag, we call tags confirmation. When something, let's say, the VWAP would here break over the VWAP, we would then wait for an adjustment in price action to come down and tag that VWAP in the purple to confirm support at, let's say, a higher low as well. So if it's here, and then obviously here, we have a higher low, but that back test of price action coming off the VWAP and tagging it on a higher low is what we look for confirmation. And confirmation trading is what saves you from 80% of your bad trades, is just being patient and waiting. So this little 6 a.m. got me. It got me, but we always take profits. It never actually got me to the red, but I shorted here. We came into a pretty nice equal top, fresh low, fresh high, which I talk about on this channel a lot, which is price action that blows past the top a little bit and then reverses. Same with the lower, right? So there's two examples of this. If this was our top right here and where my short came in around 5:36 a.m., it broke into a micro high, trapping the longs and creating a dump candle. And of course, we got some very big candle metrics there that happened, 5, 5:30, and 6. Those are really big 30 minute candles. So those abrupt reactions, which I get into in a lot of other videos, I won't get into this one, happen a lot. But more importantly, on the takeaway, a fresh high came and you got the dump. Here's another example right here at this unnatural algo force up, comes down, right? Hits 2 in the morning, fresh low, see ya. Right? Reverse, comes down basis, fresh low, see ya. We call these stop loss eaters, and the market is so good at hunting for our stop losses. I use a system called hard open, hard closes, right? So if I was a long player right here, just for example, and I know where the top is in sequence, and I see some candles start to develop, say I'm, well, long or short. Let's not be a long player. Let's be long or short. We'll wait for confirmation. We put a top in, and the price action comes up, and it's riding this little 10 SMA, and it peaks up and over. And if I'm, let's say, the short player first, and I'm shorting into this top, right? I need to understand that this top value does not get a stop out zone unless there is a candle fully developed above it that is not touching. This is what I call a hard open, hard close. This candle opens the hard way above the prior high in sequence, which I'm looking for, right? Right here. This level. See how the candle opened? Closed above 5864, because that is the high in question. If a candle does not develop completely over a price level, which is a hard open close for me, I don't stop out, because the market is so good at, it just picks these poor retail traders apart that will, even if they short a top and they get a great entry like this and it comes down and it just peaks past a little bit, peaks past a little bit, and then they end up missing their whole move because for whatever reason they set a stop right at even at that high. You don't want to do that. Let the trade work, especially in NQ. ES is a lot cleaner and it's way more forgiving for moves that push past levels, but just you got to let this thing work out. Hard open close, because you would have missed this entire dump if you got stopped out on these two little micro candles that pushed past your entry zone. Okay. So how do we navigate this extreme algo squeeze up, right? So in Discord, I said, please get out the way. I'm done with the short scalps. This last 6 a.m. candle was an absolute scam. And we have already posted the short levels on X at this time. You know, we're coming down, and these are our two short levels that were in question. Here's where the algorithm plays are, right here. This was an algo. This was an algo. This is a double algo. There's obviously two of them, right? And I have never seen my algo system place two perfect, these are perfect algos, not small, not big, perfect. Okay, not too small, not too big, nothing exhaustion. And if you trade with us live, links in the description if you want to, I explain these every single morning on why we have these adjusted targets. If we see such a perfect one like this, it has never missed a fill. And well, even with the runaway, right, it came all the way back down, right? So how do we pick a top? Well, first off, we get out the way, because we had a red zone there, another algo breakpoint. I call those breakpoints. And if it would have opened into that breakpoint, 8:30 a.m. Central is market open. Here's that red zone, snap, get out the way, it's gone. Well, how did we pick the top right here? Well, our oscillation indicators, right? And we are very patient, right? So as ES came into the breakpoint, we have a super hot RSI with, again, a fresh high break reversal scam. The market stop loss eats, as we were just talking about. Look at this top level, right? This is the current high before we peaked into another high. But what are the oscillation indicators telling you on our 5-minute chart? Well, we're starting to get, now during the peak here, we're already starting to get on the RSI a little too hot. This, during live trading on the minute and 5, was up to 90. When you see something 90 to 93, it is a very limited risk entry to short something on an over-purchased relative strength index indicator on the RSI. The MACD as well, after 9:15, look at the histogram weakness. Those are the little bars that you see under the moving averages. You see this top, and then you see the lower high, and it's starting to cross. Now, just because it's starting to, MACD is a lagging indicator, which means the indicator sometimes will start showing a signal. Price action will go higher on that short signal, because right now the MACD is telling you short bias 915, but all the way through 930, 935, we actually pushed higher. It's a lagging indicator. It's telling you to get ready, not enter blindly, okay? So let's go over this short that we had called here on the top, and we got all the way back down to our algo programs, which is amazing. MACD did the cross, small histogram wave, RSI is starting to fail. So what's the trade plan look like? And this is the one I called to VWAP, and then of course I said trend direction after VWAP. So you got the high day prior, hard open close, as we just discussed. Unless there is a candle completely developed, opened and closed above this high, not stopping out. And why would I? The RSI was built up to 90. We're overbought. We had this crazy run out of the gate. The first 15 to 30 is done. We're getting data coming in, which inflation data was coming out on Friday there. Histogram showing back down, and we need a pullback to confirmational support on trend, which means even if we are having the craziest run up, there's still opportunity to pull back, and it needs to pull back because nothing goes in a straight line in the market, right? So as we have the top and the lower high picked, we are seeing oscillation indicators. What else do we see, right, on some of these indicators? If we zoom in really close to the 200 SMA, and I'm really big on tag magnets, right? So something where price action actually hits a moving average. Do you see that? There is a gap there in between the price action of the candle wick and the 200 SMA on the 5-minute. So in my brain, I knew back where I'm just stacking catalyst, right? I'm adding to the conviction of my trade. I'm not just taking one catalyst and hoping for the best. I'm going, we have a shy on the 200 back here, which I know price action can come back down to actually tag that in the 200. I have conviction in no back test of the VWAP as well. Purple dash line, same scenario. You zoom into this price action here. Do you see it back testing confirmation strength on the VWAP? After its interaction here, push, no tag, no tag on the purple, shied, ran away. Okay, these are aggressive squeeze ups on an algo protocol. That's fine. When it turns around, those will be our short targets for confirmation. 666 SMA in this light purple-ish color here, tagged in, confirm, broke over, shy again, no tag. So these little shies are giving us just tiny hints, right? Nothing's 100% in the market, but hints. We are stacking catalysts. So we know that the moving averages, VWAP, are all shying. We're getting an aggressive force up unnatural candle movement, and we got a big old algo scam away from our short targets. Okay, well, let's all confirmation on the roll again. We have that hot RSI. We're coming down. We hit our first target VWAP. Awesome. Nailed it. Came down to the 100 EMA. Well, the 100 EMA, we just talked about it shying away. So the first interaction back to that 100 EMA could be a positive support. So if price action has shied it and it ran away in its way up here, as we come down, the first back test of the price action to the 100, we should at least give it a chance for support. Not just a trend. We don't have confirmation to just dip by and go for the best, blah, blah, blah. But we have a first tag metric, and that's how we scalp here. I am a high-paced, high-frequency scalper that low-risk entries on first tags a lot of the time. So we have that higher high flush, VWAP target, 100 EMA. Look what happens when you hit the 100 EMA. First tag. And I'm not talking about this whole consolidation, do this little push. I'm talking about the first tag, okay? So the price action comes in, hits the 100 EMA, I go long for a scalp because we have shied it in the prior price action as we just discussed. From that 100 EMA to push back to VWAP, 8.5 points. Let's give it a reasonable entry. We get back to maybe at 7.5. That's monstrous. I go anywhere from 3 to 5 contracts, even 2 contracts. That's $700 on a first tag scalp that took you a matter of minutes. Great. Well, let's talk a little bit about the algo targets and the other magnets now. So we just talked about all the moving averages and moving components we have to back test, right, and confirmation, and we are still struggling with my algo system that I do not release, that these are going to come back down here to these eventually, right? And I've never seen it not fill same day with the settings that it had on Friday. So I'm still awestruck. I'm still super confused on how we're 50 points out here at ES, but there's still a possibility of it coming back because I've never seen it not. So as we came into that, let's look at the breakaway here. 100 EMA comes back up, fails VWAP, 10 SMA daily. That's this large blue. This is a 10 SMA daily, okay? That is the daily time frame, and we have that coded inside our intraday 5-minute chart. And as we break down that 10 and the 100, more importantly, first tag, snapperoo. Well, once it snaps the 100, what did we say shied away? 666 and 200. No back test. Boom. 200. Boom. 666. Now, first tag metrics on these two. As we came in, whoa, drawn tool was still active. Here is the 200 SMA, right? So in between here, we have a double kind of tag, because these moving averages are close enough to use both at the same time, which means if you were getting into a trade right here at the 200, you grab one and it slips past you and it goes a little bit and goes to the 666 first tag. That's fine. 7 points, not that big of a deal. And then your entry point, you would double up and dollar cost average into the first tag of the 666, pops back up, gives you that 7 points right back. So if you entered at the 200 SMA first tag, 1 or 2, doubled it up at the 666 for confirmational first tag, still in the money. For the scalp, again, not reversal, not long-term, not holding it for a half hour, scalp, very fast pace, first tag metrics, okay? And as we come back down, we're already now super close to the algos. We're launched past the 666. We have now tagged one algo. How would that have saved you? Well, we know that these algos we're going to tag. 5.8, 5.6, 75 comes in. Well, look at that. That is a high conviction. Why is that? We're stacking catalyst. What are the catalysts we're stacking? First tag of the 666, first tag of the algo that we've been waiting for, and oscillation saying, hey, we're getting a little extended, right? So we bring up our oscillation indicators. RSI, after we deeped right here, she was getting cool into the MAC. And I'm like, okay, well, that's fine. We're getting cool. Now we scalped a first tag. Look at that beautiful first tag because the algo comes down, hits the second algo, also gives you a pop, right? Not a very quick one, but a first tag washes out. Okay, no big deal. Now we start looking for the reversal. Now we're too low. Look at price action. Look at your common sense. Are you looking for continuation shorts after we've already chased down the magnets that we just talked about? VWAP 100, 200, 666, 200. Now we're way down here. We don't even have anything as such as a lower high to get in on a beautiful rollback. This is launch down, consolidation weakness, launch down, consolidation weakness. No great entries were given to get back in unless you knew what to do during oscillation, fresh high reversals, and what we discussed during the tags. Now, the algos are already hit. What's the last move of the day here? Well, we have just absolutely reversed this insane sell all the way back down to the algos, which were our short targets, which we have posted on Twitter. Same with NQX. And the oscillation is now giving up. We have an RSI higher low with, again, the MACD being the lagger. It takes time for the MACD to work out, but it is telling you the signal of the histograms here saying sellers are giving up. We're closing the gap in the distance between the moving averages right here on the MACD till it finally crosses, right? Coming into about 2 o'clock p.m. here, and that's where the big race push is. Let's talk about hard open closes and how we would utilize this. Divergence and indicator versus price action. RSI is showing you the higher low to push back up. Even though we're stuck in the bottom channel, which you hear me say all the time, there's still time for reversal moves and scalps. Fresh low of the day here. Oh, man. Messed up this drawing line. Fresh low was here. That big old extension down. There we go. And then that algo set a mood right here, right? Little personality. Look at how gnarly these 5-minute candles are. Death equal open on the 5-minute, revival. That's a very strong reversal dump candle. Dump reversal on the 5-minute. Okay, awesome. What did it hit? Oh, weird. Confirmation back test of crap we were just talking about. Interesting. 666 snaps it. Now price action, since right here is under the 666. Slams right back to it, comes back down for a fresh low. What do we know about fresh lows and reversals? What we just talked about. Market loves to eat people alive that don't wait. We finally have the extension. We finally have the over exhaustion, no lower highs. We are extremely weak. We're starting to get the histogram. We're getting the divergence of the indicators. Go long. Why not? This whole general area long right here is showing you that we have the opening price of the futures. We have low a day. We have all sorts of beautiful supports right here along with diverging indicators. So again, here's our fresh low, because again, the algos will get you. So let's make it nice and easy to see. You go long into this dip here because of extension, because of the RSI. It's in between this 15 minutes. You have a long opportunity, even if it's anywhere in here. But your stop out is not till you are hard open closed underneath low a day. And where's your target? Well, your target range, because the RSI is in the lower bracket of undersold or oversold, is to the 50 halfway point. The market loves halfway points for probabilities. So once you see that higher low persist and come back up, you have a limited risk available trade to take it back up to, you guessed it, confirmation, algos, moving averages, so on and so forth, right? But more importantly, the oscillation indicators 50 on the RSI, okay? And then we didn't have enough time in the day because it is Friday, it is low volume, where it never got another back test of it and kind of washed back away, but perfectly fine. This scalp would have worked out. fresh hard open close at the lows, purchasing the confirmation of the RSI's divergence up to the 50 RSI point right here. So you maybe would have missed like that super high, but you would have got back to the 666 yesterday's close. You're looking at anywhere on the scalp play that you would have purchased into, and dollar cost averaged in correctly, up almost 15 points. That is massive on ES. Those are some really good moves. Okay. I know this is getting stretched out in a long video, 20 minutes already. So we're going to stop with the VIX. So all I want to do is leave you guys with the VIX here. I'm going to pull this baby over. We're going to see what we've seen on the volatility index here and show you what we would have seen as well. Now, again, that market was extremely awkward in the morning pre-market. We have a gap and go to the downside, but what did the VIX tell us? Well, the volatility index finally gave us a little bit of that upside signal again after it rolled through what? Deviations. I'm a huge user of deviations on the volatility index. So when you see the deviation outside of band 1, danger zone, we are in danger of snapping back. Here's the center line. Here's -1. Here's -2. When price action got to -2, oh, weird, held support perfectly. As the volatility index goes up, markets come down, right? And then the VIX reverse. Again, that whole large downside move was absolutely crazy. 11:30 a.m. Central, VIX ran to the +3. Okay? $20.50. We're back into the daily and weekly deviations, which is this giant level right here, but I'm using intraday right now. So the intraday 5-day deviation made it to the mother trucking +3. That's nuts. When it hit the +3, the VIX had to go down, which means market goes up, right? So let's take a peek at that scalp again. This is extra confirmation. I'm looking at the fresh lows. I'm looking at the moving averages. I'm looking at the extensions. I'm looking at the algos and the VIX all at the same time, compiling enough data to tell me direction, okay? Now, let's speak. When was the peak? Right here. 110. 110. Exact bottom of the market. So the VIX into the deviation +3, telling you the volatility index is at +3. This is absolutely insane. We don't see this thing move outside of +1 usually, much less 3. Okay, so again, here's a +2 runner, +3 ripper right here, +3 ripper right here, +3 ripper. What do you notice when every single time the VIX has ran into a +3? Opposite for the scalp, okay? You get it. It's just giving you conviction in the volatility index, the confirmation, and the support. If you found any value in these videos, you want to hang out, you want to trade with me live every single morning, links in the description. I do that. You want to support the channel in a different way. I trade with Apex Funded Trading. We got codes TG33, get you an 80% discount, 1-day pass on those funded. Come join us with those. We'll show you how to make some money. If not, see you on the next video. Take care.